If you're thinking about buying a home, let me explain to you what a temporary buy down is. Temporary buy downs are not for everyone, only if it works for your situation. A temp buy down is when the lender gives you a reduced interest rate for the first up to 3 years of the loan. This could be really helpful if you're trying to ease into your monthly payments and not just start paying, a huge chunk of money every month for your mortgage. So there's different types of buy downs. Let's go over the 3-2-1 temporary buy down. So for the first 3 years of you having the loan, you're going to have a reduced interest rate. For the first year, you're going to be paying 3% lower than your actual rate. For the second year, you're going to be paying 2% lower than your interest rate. For the third year, you're going to be paying 1% lower than your interest rate. And then when you hit that fourth year is when you start paying the full interest rate. So let's say your actual rate is a 6.5. The first year, you're going to be paying a 3.5 interest rate. The second year, a 4.5 interest rate. Third year, 5.5 interest rate. And when you come to the fourth year, you're going to be back at that 6.5 interest rate. It does cost money for you to do this. This is typically paid by the seller in the form of seller credits or sometimes even the lender. But this is best for people who expect their income to rise over the years, and getting these smaller payments early on can really help them stay stable financially. And let's say interest rates drop before you hit that fourth year, you can refinance your home and never pay that full interest rate. There's also the 2-in-1 buy down. It's essentially the same thing, but instead of 3 years, you just get 2 years. But talk with your lender and see if this option can work for you, or if you're thinking about buying a home, this is something you may want to consider.